In terms of traditional finance, a bond is a debt product in which the issuer is required to pay the bondholder's face value as well as interest payments, riba. The terms of the underlying project or projects may not always match the terms of the securities. Holders are not subject to losses or harm from the issuer. The prospectus release does not contain shariah restrictions, and the rights of the security holder are not linked to the issuer's assets. Sharia forbids the use of conventional bonds as a result. The term Sukuk or Islamic bonds refers to its equivalent in Islam. Sukuk are asset-based investments in which the investor holds a proportionate, undivided interest in the project or asset at stake. A Sukuk, plural of shok, certificate is issued as proof of ownership. The funds raised by the certificates are invested in a project or asset. Ownership of the underlying asset or project is represented by each shok, certificate, that is issued. Sukuk holders are entitled to earnings and are also responsible for losses. A project or activity at the core of the Sukuk is related to and correlates to its maturity. All the Sharia regulations pertaining to the issuer, manager, and the Sharia regulations that control the Sukuk are contained in the prospectus that is published. Features of Sukuk. The creation of Sukuk is the process of dividing up projects, usufructs, and tangible assets into pieces that represent proportionate ownership. Each holder of a Sukuk has an undivided, beneficial interest in the underlying assets or projects and is qualified to receive a portion of the income produced by those assets or projects. Sukuk are neither IOUs nor debt certificates. Returns are not fixed, instead, they depend on how well the underlying assets or projects performed. Sukuk construction. The issuer will review the legal and operational documentation, which will also be included in the prospectus, and will meet with an investment bank to coordinate the composition of the investment bank. A special purpose vehicle, SPV, is created. The SPV is regarded as a separate legal entity that safeguards investors by limiting creditors' claims to the amount outlined in the SPV and preventing the attachment of the SPV's assets in the event of the bankruptcy of the issuing agent. For the benefit of investors or Sukuk holders, the SPV purchases assets. Typically, a third party will take on the role of the underwriter for the subscriptions and guarantee to purchase of all unsold Sukuk. www.muslimfin.com